Given today's market drivers, here's how you could approach trading E-mini SP 500 futures on June 13, 2025. Market context catalysts. Geopolitical tension. Israel's strike on Iran sent SP futures down 1.15% and sparked a sharp oil rally, triggering risk aversion. Short-term rebound potential. Historically, market dips from regional conflicts tend to recover within a few weeks. Technical readings. TradingView signals a strong buy on moving averages, though oscillators flag strong sell, suggesting divergent momentum. Strategy setup. 1. Pre-market review positioning. Focus on the early sell-off. Watch for a panicked drop, e.g. open 1% lower. Use VWAP to guide entry. Aggressively fade large deviations off the volume-weighted average. 2. Scalp bounce trades. If price dips significantly below VWAP, consider quick long scalps toward VWAP. Maintain tight stops below recent lows to limit downside if volatility accelerates. 3. Reassess mid-session. If stabilization occurs, price near VWAP. Shift to a momentum play, assuming dip buyers emerge. Break of short-term resistance. S6000, 6050. Consider layering in longs targeting prior resistance. 6,138 per CPI analysis. 4. Hedge, defensive trade. Expect oil-induced inflation pressure. A breakout could stall, so consider a stop limit for long positions just below VWAP to protect capital. Alternatively, keep small short exposure if breakdown below major moving averages, 20-50 day. 5. Risk management. Keep position sizing disciplined. ES moves $50 per point. Use micro ES, MES if concerns about leverage or volatility. Monitor macro news, CPI release, updates on conflict escalation, Fed signals. Trade flow summary, market condition strategy notes. Pre-market, gap down, fade below VWAP short scalp, tight stop. Mid-session pinch stability, momentum long. Overlay breakout above VWAP, resistance, YOI send, 6,650, breakout above resistance. Add long cautiously, scale into move above 638 if supported by CPI data. Breakdown through MS defensive short. Hedge against further risk. Quick checklist. 1. Identify VWAP pre-market, define risk zones. 2. Enter fade long on dip, short scalp below VWAP. 3. Shift to momentum long on stabilization breaks. 4. Use tight stops, respect key levels by 6,000, 6,138. 5. Watch news flow closely. CPI data, Middle East conflict updates, why this works today. You're exploiting mean reversion versus VWAP while hedging for a sustained move. Diverging technicals suggest both dip buy and momentum approaches could work. Historical patterns show conflict-induced dips often rebound after a few weeks. Today's sell-off may provide opportunity. Final take. Trade with discipline, fade the panic early, then pivot to momentum if the bounce holds. Use micro ES for precision and tight risk control. Keep an eye on headline risk and be nimble.